All right, the S&P 500 and the Nasdaq 100. When you talk about what happened on the day, what stocks specifically that we're liking right now, and what we're looking at going forward as far as news and the overall movement and kind of situation we're in with the market. Let's not waste any more time. Let's get to it. Now, the first thing I do want to mention is a little bit about stocks, but I want to start with crypto. Today, Michael Burry actually made a pretty good tweet, and it has a lot of merit here. So this is the problem. In 2005, when I started using a new kind of credit default swap, our auditors were learning on the job. That is not a good thing. Same goes for FTX, Binance, etc. The audit is essentially meaningless, meaning we're doing audits on things that we really have no information about, because specifically this sector is not regulated and it's just a very new area of the market. There's not going to be a crypto video, but we're going to go places. And I think this has a lot to do with what's going to happen on the market and some stocks specifically that could probably make you some money here. So it goes on and on about what's happening here with Binance. Now, if you don't know what's happening on Binance, there's basically a giant assumption right now that they're laundering a lot of money. You have a lot of big people saying they're okay, a lot of big people saying they're going, to the trenches. My thesis is, and I've been talking about coin for quite a bit of time, that I believe it's going to get absolutely crushed. Now, I don't believe Coinbase is going to go under. I don't think that it's possible if everyone starts just withdrawing all their money. But looking at what's happening here, you're seeing the demise of a lot of these exchanges. Going even further, I think this is just hilarious. Kramer is a comedian. On December 14th, do you feel as reassured by Binance as I do? Literally today, 2 days later, I would trust my money more in DraftKings than I would in Binance. I don't know what to say. Follow me on Twitter if you want to get some more information on this, but that's that. Next, I want to talk about what's happening from Fed Daily. Now, Fed Daily came out today, and she was swinging for the fences. And I found a pretty decent link if you guys want to see the bullet points of what was said. I don't want to cover all of them, but basically she hinted that they could hold rates into 2024 at peak. So we already know they're not going to do any rate cuts in 2023, but now there's this thesis of don't just wait for 2023 to end. This could go into 2024. Now, this is kind of new news here, and that could be pretty detrimental, but it's also a year away, so I don't think we need to think about it too much now. Going a little bit further, also, this gives you the best look of just the overall bullet points of everything that was said today, and it was pretty wild. The first statement, I don't know why markets are so optimistic about inflation. This is real, actually, what she said. So I was going through everything she was saying, and this is the best summary. Inflation risks are still to the upside. We are resolutely getting inflation 2%. We already know about that. We don't see a dramatic slowdown in the labor market. This was a very big statement here, and I want people to understand that, because she went on to elaborate, and they did not include it here as much as it was important, that you could see inflation start to spike again if we don't get the labor market under control, which is the biggest concern right now in the market. The biggest concern in general has got to be the labor market. If the labor market does not slow down and overall unemployment does not rise, you're going to have hardships on inflation. I'm just telling you right now, it's going to be bad. You're never going to see just a straight decline, because we're always going to be feeding this, furnace of inflation, right? You have to understand that's happening there. So I do want to move a little bit further as we're going through here also. So I will have this link down below if you guys want to see all this, but she went over some pretty, crucial things. This was important. I would go ahead and look through it. Before we get to those charts, I also want to mention VIX. VIX, this is basically going over the past year since last December. If you don't know, basically we've been in a downtrend for basically a year now. Since mid-December of last year till now, you officially are in like a 1-year downtrend. Congratulations. If you're still here, you survived it. Probably one of the hardest markets ever to trade in. But if you look here on VIX, you continually are hitting this $19, $20 range, and you've been bouncing out of this, and it's cute to dip in the market every time. The lowest area down here is around 16, 17. That's where it becomes a must buy on basically the downside of the market. But when you're hitting here, you can see even on these days of where you have some downside, VIX is still declining. Now, a lot of people were asking in yesterday's video, I saw some comments around, why is VIX dropping if the market is dropping, right? Now, again, I say this in every video. VIX does not represent, or the volatility indexes do not measure if the S&P is going up or down. Now, they will have a little bit of impact, and they'll show you a little bit of information for that, and they'll give you more details, but it's based on derivatives. So if you don't know, you need to Google it. I'm not going to go and teach you a derivatives class. I've gone over this a lot here, but you're seeing a lot of puts, a lot of options come back onto the market, and I think you're seeing aggressive shorting at the moment right now. So I do want to take a little bit deeper dive on what's happening specifically with stocks. As we go a little bit more in here, I want to address where we're at here on the Nasdaq. Now, specifically when we look here, again, this is the 2-hour chart, but I just want to highlight a little bit of a time frame. If I come back and I highlight basically November 10th from here all the way to here, I want to highlight that a majority of all the price action was established in this range right here, around 11.9 down to lows of 11.4. The same thing goes with SPY around 403 down to around 390, about a $10 range for a month. Arguably the most chop that you've had in indexes, in a long time. I want to say this though. You're getting a break under this area. I've been talking about the 200 moving average and some really big things that can show you overall guidance. But when you're looking at this, you're finally holding below a range. You held below, you came up retested and got rejected below 11.4. That's very crucial. Before we go any further, I have to ask you to consider doing 2 things: liking and subscribing. Every single day I make videos for you, so you are prepared on the market. And just so you know, every Sunday, I did my last video, the China takeover, but I'm going to be going into deep dives on the market and what's happening. So more of a longer term viewpoint, basically like a next 3-month outlook and things to be looking for and hints from the Fed, so you are prepared with fundamentals also. I not only want to just go over what's happening in the short term, but the long term, but my goal of the channel is not to give you signals, give you plays, or anything like that. Use me as an indicator. Do your own financial due diligence and your due diligence on these stocks. But I want to help you get educated to learn about how to be trading in this market and what to be looking for when you're looking at plays going forward, specifically when it comes to charts. That's the goal here, is to educate you and help you with a little bit of fundamentals along the way. Let's get back to it. So when we look here, that's a big statement here. Next, I want to talk about this. Here we go. Look at SPY. SPY is kind of, it's not pretty. If we come in here, what I'm going to do really quick is go to indicators, bring this up really quick. And again, I'm only using this because it's just been so helpful for everyone. Again, over and over and over, it's been probably one of the best indicators. As we look here, you have your dotted line right here. This is your daily level right here. This is your daily 200 moving average. The green line right here is your daily 100 moving average. As you can see, from November 10th until basically yesterday, we were pinching in between these back and forth, had a break, and then eventually, boom, we shot down. Now, a few things I mentioned on Twitter and published on there also, so y'all can see. I have all those pictures and stuff on there. I can do more updates, obviously, on Twitter, so the link is down below if you want to follow. But as you can see here, the things that we were looking for and that we started to see was interesting. We saw a double top here. And this was where I got kind of worried on the market. A double top here. And then I made the video and I talked about the 200 moving average. You faked out above the 200 moving average twice, double top at supply. And then you came back below. And basically it was a bloodbath ever since. So looking at this, I don't like it. I'm scared. It looks pretty disgusting. Right now, to stay onto the bear thesis, you want to stay below the 100 moving average on the daily time frame and stay below that previous little range bound area around 390 to 389 roughly. If you stay below there, I do expect more downside. Going into something like Q's giving you a better visual here. I believe today we saw more downside on SPY, which is kind of a first in the past like 3 months. This is crazy that SPY is now dropping faster than Q's. If we look here at Q's, you still have a daily gap. I do want to highlight that. All the way down to around 268 roughly. I do want to highlight the 268.60. So I think there's more downside here still for Qs, and you're probably going to come fill this gap. As you look at SPY, you can see that you did come and fill the daily gap right there already on the day. Worth mentioning when I highlight that, putting that on Discord, everything in between. Very important. So as we look at that, that's the concern. I do see more downside here. I don't think Nasdaq is done. I think you're just kind of playing catch up. And when you start playing catch up to the Nasdaq, it's usually not a good thing just from past instances. Now, a little bit deeper, I want to start going over some stocks that I'm liking and a trade that I entered today. I'm going to publish on Twitter. I didn't get a chance to do it today. I've had my son. We have the holiday break. It's going to be great. Santa Claus, Elf on the Shelf, you know, all the good stuff. Now, when we look here, my favorite play right now, I told you about Apple yesterday, and it was an absolute money printer. And if you look at Apple right now, I'm going to come back to this stock. It's Meta is the one I'm in right now. But if you look at Apple, if you zoom out here, everyone and their mama is telling you, go long on Apple, 134, 134, 134. It's the support. And I told you yesterday, pretty positive. We're going to come test that 134 level. You did. Now, I'm not telling you not to go long. I'm not telling you to go short. Okay, do whatever you want. But I'm going to tell you something. It's really similar to a play we just looked at. NVIDIA. Remember when we traded NVIDIA and we broke down, got the fake breakout, and we mounted 162.5? What did I say happened there? It was very clear and very evident shorts started to cover in the shorter term. A lot of shorts were attacking this, trying to get this below this higher low trend. You broke down. I believe now you're probably going to get that really big drop here. But if you're looking here, that was the concern. You got above, shorts started to cover, and NVIDIA was the strongest stock on the market for the next 3 days. Now, we come back to Apple really quick, and I want to show you something. I do believe Apple has upside potential. If the market bounces, I think Apple could easily get back to 138, 140 in a hurry. Very quick, very strong. So when I'm looking at Apple here, though, I have to caution myself and say, let's play devil's advocate and let's see, well, what's the worst that could happen? If Apple opens up on Monday and gets below 134, I have to assume shorts are going to start rapidly stacking in one, and people with longs are going to start maybe either cutting or rethinking positions. Because if we zoom out just a little bit more to the daily, what do we have when we break this level? Tick tock, tick tock. I don't know what TrendSpider's doing for me. You're embarrassing me in front of my community. Don't know what's happening. Cool, we're back. Anyways, you break below this, you got no liquidity until 128, 52-week lows. So this is what I'm doing. This is how I'm playing it. Not telling you to do anything, do your own DD. If you open up Monday below 134, I'm playing this down to 128. It's the easiest trade out there. It is what it is. And I've been telling y'all for a while, Apple is the stock to watch. Because if Apple breaks out of this, this is a weekly trend. You have higher lows going. If you break below this, and you've already made a lower low here, I do want to say that. If you break below this, I'm going to tell you now, this could cause the SPY to get wrecked. Everyone already knows Apple's the biggest stock in, the name. It's the biggest stock in the S&P. But I'm telling you right now, if this thing starts to get hit, you need to be concerned for your SPY positions. That's what I'm going to say. All I got to say here. And again, once you broke 130, that's what I'll say. 138 is a massive level. You broke that. Boom, 134. So again, do what you got to do. I don't know. Big concern there. Moving forward, Meta. As we look at Meta. Now, Meta's been one of my favorite plays, right? I've been talking about Meta puts for a long time. Well, Tyler put his money where his mouth is now. So if this is a weekly time frame, if we zoom out and we look, you can go all the way back to 2016. Your swing high here in May. You came down, you mounted, got under, stuck below it for almost a month, came back, swing low, come down again, previous 52-week low, and now you're rejecting. Can I get a clap, people? Can I get a clap? Because I think we found a good one here. I think we found a good one. Now, again, this is where my money is. I'll tell you right now what I have. Let me go over. Oh, my interactive brokerage is closed. I can tell you, though, I have it on my phone. One sec. Let me beep, beep, bop, boop. If we look at Meta, I got January 20th, 115s. My entry was about 440, 445. Again, do whatever you want to do. I just like to be transparent with you so you know if I'm winning, if I'm losing. I post my winners, I post my losers on Twitter, on here, so you know. Because what's the most important part of the game? Knowing how to lose. You need to understand that. So I always want you guys to know that I'm transparent with y'all. I post the losers. You're never going to get me just hyping up and showing you $1 million. I do make a modest living. I do good for myself. I'm not filthy rich, but I try to be honest with you guys 100% of the time. We come in here to Meta. What are we looking at? 3 rejections of the 122 level, lower highs, lower highs, lower highs, and we're getting rejected at the 120 area. We come in a little bit deeper. What do we see here? Go to about the 115. Boom, boom, boom. Look at that. Flipping the level. Short term, what are we looking at? We're looking for about 118 down to basically 116. But I honestly think this thing could get absolutely slammed. You're seeing a lot of upside because what's happening with TikTok and the government right now. Right now, you're seeing TikTok being banned on government devices. I don't really care about that information, to be honest. I'm just going to tell you. I don't think Facebook is going to thrive based on TikTok getting banned from government phones. Oh, no. I'm sorry. All the boomers that work for the government can no longer use Facebook. And I'm sorry if you work for the government. God bless your soul. But yeah, so, maybe this isn't the worst thing for you. Maybe you shouldn't even be on Facebook on your government device. I'm just going to point that out there. So that's the concern here. That's what I'm looking at. I'm looking for a clear downtrend break. Probably down 115, but I think this thing is going to come down to the wire. It has a lot of pain here. If we start to see a sell-off on SPY and Qs, I do believe Meta will take a beating. That's my thesis. That's what I'm looking at. That's how I'm trading this. Now, again, runners up here, what I want to say. Tesla, you came down to 151. We mentioned this yesterday. Next level's down at 138. You have like a gap down there. I mentioned that yesterday. Runner up is going to be NVIDIA. I love this thing. You're getting back below 167, 168. Nice retest into the day, pushing back down. Next up, I love AMD. I still think it has more downside, at least down to 62, 63. But it's looking like you've already given up a lot of these gains that you had, right? A really nice bounce from 52s. And guess what? You're coming right back down. But the sector that I would have to say, if I had to put my money in it like for like the next 6 months and bet on some downside, it's going to be the banking sector, XLF. I told you guys about this a while back. I got stopped out of my trade. It was probably the most depressing thing ever. But if you look at XLF, you came right to this level, got a bull trap right here and pushed you right back underneath. Pretty beautiful. Bank of America, Citigroup, Wells Fargo, these should all get hit. And why? I'm going to tell you right now. As we look at interest rates, if they stay very high, the price of getting a loan, the interest rate of getting these loans is going to stay very high. And why these banks succeeded so well in 2020 through 2021 is because the fees were minimal. So they were just handing money out. Here's $100. Here's $100 over and over and over. There was no real cost on your credit, right? But now that ship has sailed. That ship is gone, right? Because the cost to get a house, the cost to get a car, everything's gone up. So they're going to be giving out less and less loans. Therefore, they're going to be making less and less money unless you're on an adjustable rate. But you have to assume that they're just not going to get more business compared to what they were getting before. So growth should slow down for these guys. So that's why I expect banks to get hit probably the hardest across the market. Now, for me, long term, I think banks are probably going to be one of the safest and best things I can buy, maybe down like in a 1 year period or when we start to at least see rates stop moving. But until then, I have to bet on downside here. If we look here on the 4 hour, again, this might make some people ugly or feel, mad or ugly. I don't know. But I'm going to tell you right now, I'm going to show you one of the most beautiful things here on the market. This is Wells Fargo. Okay. No one's talking about it. But let's just say right now, that is a daily bear flag, a weekly bear flag. I don't know what you want to call it if I've ever seen one. That is the most disgusting thing that I may have ever seen, right? Gonna tell you, my opinion, this is disgusting. I mean, banks look atrocious. And where I would be looking at Bank of America, Citigroup, Wells Fargo, that's where I would be focusing right now. That's my opinion. More stuff coming out for you. I'll see you on Sunday. Have a great weekend. Hey, Christmas is on the way. And don't forget, we have the option drops extravaganza. And if you don't know, on Twitter right now, we have a really big, my cough is still so terrible. Get on Twitter right now if you're not. Follow me. And guess what? We're doing a big giveaway. We're going to be giving away, I believe, is it a yearly membership? I think I want to make sure. Let me make sure. I'm trying to see. I'm going to retweet it right now so you can all go do it right after you watch this video. Right now, all you got to do is go on there. I'm going to unretweet it and I'm going to retweet it. Oh, crap. That was a mistake. Anyways, it's a giveaway, $100. We're going to be announcing it, I believe, on the 19th. And then we're also going to be giving a year membership to the Discord. Go retweet it, like it. The rules are on there. I'll see you on Sunday.